NIO has skyrocketed in price amidst the continued success of Tesla. It's one of the most watched stocks on major trading platforms, and it has a lot of videos and articles supporting it. Tons of people are saddened with themselves for missing out on Tesla. Maybe they sold at 900, or maybe they simply never bought shares. And I think a lot of the spotlight is shining on the electric vehicle industry in general because people are looking for that next Tesla. I made a video previously giving a general overview of the sharp spike in many electric vehicle stocks. And in that video, I promised to give a more detailed analysis because there's a lot going on with each of these companies. I'll have the previous video linked in the description. The first company on my list is NIO. NIO is a Chinese-based electric car manufacturer with a lot of funding from major Chinese corporations like Tencent and the Chinese government itself. Before I get too deep into NIO, I want a quick reality check. Fairday Future was also a Chinese company with serious funding that wanted to sell electric cars across the globe and especially in the United States. They went bankrupt before selling a single vehicle, and this was back when Tesla was still just barely getting off the ground and other companies stood a much better chance of dominating the US electric car market. Funding and a cool prototype does not make a successful company. In Fairday Future's case, they had huge issues with communication between engineers in the US and China, a lack of proper hierarchy, escalation, and corrective action reporting. Things you would see in any ISO certified company. There were huge issues that ultimately strangled the company. Now, to NIO's credit, they have sold vehicles. They legitimately have sold vehicles, but they can only be bought in China right now. NIO has sold 3,436 vehicles in May of 2020, 10,429 in 2020 total, and has cumulative deliveries just over 42,000. Compared to traditional auto manufacturers, this is small peanuts. But I do have tremendous respect for a company that is actually selling products, not promises. Making a factory and selling production units is infinitely more impressive than a stupid prototype that will never be manufactured or sold. NIO also has some differentiating features like battery swapping and self-driving functionality. I put self-driving in quotes. I will say, of the electric vehicle stocks that people are talking about, NIO does seem to be one that has a lot of things going for it. I can't stress this enough though. This company is actually selling cars right now in very small volumes, but it is significantly different than a company just putting a prototype up on stage. Now, for the concerns. First off, this company is not profitable. They have a negative earnings per share of negative 44.1. NIO has never been profitable. So when you're buying this stock, you're betting on the future, big time. This simply makes it a riskier investment than a well-established company, say Walmart. Investors are betting on a serious amount of growth, and you could get burned if that growth is not met. Look at the spike in NIO's price. Another thing to realize is that NIO has Chinese government funding, and that the Chinese government has a minority stake in the company. A lot of people don't understand government ownership and stakes in companies in China. They're used to the US system, where the government doesn't really own companies. Even labs have contracts to run facilities. There are cases where contract owners like Battelle built buildings to expand Pacific Northwest National Lab and then claimed the buildings were theirs, and if the government changed contract holders, they wouldn't sell the buildings to the government. Now, additional capital is good, but tensions between China and the US are much higher than they've been for a while. A company like NIO, with government involvement and the pursuit of tech, could very well face tariffs, outright bans, or other forms of discrimination. The UK and the US have both banned Huawei from dealing with 5G standards and other routing applications. Huawei is a Chinese-owned company that is partially owned by the Chinese government. The combined risk of tariffs and security concerns by Anglosphere nations do elevate the risk of the stock. Now, the Chinese market is bigger than the US market, and they could still sell in other nations, but it would be a huge blow if they cannot sell vehicles in the US, especially since all of the current vehicles are SUVs, which traditionally aren't popular in most vehicle markets outside of the US. I mean, they're hiring people in the United States and other countries, and they're listed on the US stock exchange. Remember how I said investors are betting on growth? Imagine what a restriction in US sales would do to that growth or potential growth. Basically, all Asian and even some European manufacturers have US facilities. That Kia or Toyota or Honda that you're driving was probably made in the United States. Those established companies don't ever worry about tariffs or restrictions on Japanese-made vehicles because they're making them in the United States a lot of times with tons of US parts. Now, NIO vehicles are interesting. Just scrolling through their page, you could see different specifications, beautiful pictures of the products. It seems like they have an excellent amount of design going on. Now, that doesn't make a company successful, but being able to market and show things off, especially in a competitive industry, is very important. And they are working on an ecosystem. The NIO House, NIO fast chargers for your own home rather than plugging it into a regular outlet, and reservations using the app. You can go on YouTube right now and look at reviews of people driving their vehicles. They are selling something. Even if it's lower volume, they're selling products, and it looks like sales are up. And again, this Shanghai-based company has tons of funding from huge corporations in China. Now for the clickbaity question in the title. Is NIO a Tesla killer? Well, Tesla does a lot more than cars. They do battery technology, power production, software development, and have shocking vertical integration that forces them to get involved with a lot of technologies. It's really hard to compare them to other companies, especially traditional auto manufacturers. Even though NIO is trying to approach some of the same avenues, such as self-driving, it's incredibly difficult to compare them at all, let alone say Tesla killer, especially at this early stage of the company. Does NIO have the potential to explode, to grow and become an established brand throughout the world? Definitely, but again, this is currently not a profitable company. You are betting on the future. This is a high-risk investment that could pay off or it could just collapse. It's going to be your judgment call, but this isn't free money, regardless of what some article or video might say.